let alone in the specific areas we're focusing on today throughout California, Hawaii, and just Northern Nevada as well, more specifically. So again, for those who've just joined, CE credits will be available. They will be sent within 10 business days of the course as well. They will be sent to the email and names provided on the registration as well. If you do have any questions throughout the webinar, I highly encourage questions or comments throughout. If they are the slide or the situation I'm talking about, I will be addressing it right then and there. If they are applicable, maybe later on in the course, I will be addressing them then. And if not, I will have a question and answering section at the end of the course, or time rather, to go through any specific situations or other questions that anyone might have as well. So I highly encourage utilizing the question and answering section. Please avoid using the chat for simplicity for myself. I typically like to be able to interact with everyone in our in-person lectures and walk around the room and make it a little bit less formal, but here we are as well. Now, before we get started today, I do have a poll that is going to pop up on your screen. It's to help me, and I know, and I've received feedback from many as well upon registration, which I do appreciate, and thank you as well. For those who weren't able to give your feedback, really the purpose of this is to get an idea of what you're looking to learn through the course, so I can help cater the course and the different content to the attendees that we have today as well, to help better relate to you and what you're looking to learn particularly as well. If you don't mind, please fill out the poll. That way I have some feedback as we progress through as well. So there's only a few questions there in terms of the purpose of joining today's webinar. What's your current situation? And again, we're just talking a high level. And then when does your current lease expire if you do have one? If you don't, there is that option as well, which we're going to be covering different components through today that impact the situation, the real estate situation, regardless of what you're looking to do as well. My name is Ryan Cathers. I manage and oversee our consulting team nationally, but particularly I've had a focus throughout California and Hawaii and Northern Nevada for some time now. So very familiar with the real estate. Again, I'm typically actually out there physically, either at the CDAs or hosting our lectures locally as well each year. So welcome to the course on negotiating or renegotiating the terms and rent in your office dental lease. If you're who is looking to start up or open a practice, acquire a practice, renew your lease, expanding, potentially relocating, or maybe actively looking to relocate, looking to transition or transition planning in the process, the next 5-10 years, or you own the building that you practice out of, meaning you're an owner occupant. If you fit into any one of these buckets, find today's webinar very, very beneficial. I think before we get into some of the lease components and real estate components, I think it's very important to understand a little bit about who we are, what we do, and how we support the dental community as well. Why we are having lectures like this today to help educate the dental community on this particular subject that is really not covered in dental school, where it's one of those components that is overseen and can become potentially very expensive. And those of you who are attending today, if they've had situations happen, you know exactly what I'm talking about. So essentially, we're a healthcare tenant representation firm that essentially specialize in advising and representing dentists in commercial real estate matters. So primarily the negotiation or the renegotiation of your office lease. We were founded by dentists for dentists, a little over 26 years ago now. We've now negotiated over 12,000 dental and medical specific leases since inception. And the way we're uniquely structured is we have everything in-house. Where we have an in-house leasing team that have access to rental rates and comparables in any given market. We have an in-house legal team comprised of highly experienced real estate attorneys and lease negotiators with a background of healthcare and tenant representation, and an in-house consulting team that essentially work alongside the legal and leasing teams to really help develop a strategy for the negotiations. So it's a very collaborative effort all around. On an annual basis, to give you an idea, we represent over 500 doctors each year throughout North America. We deliver over 100 CE credits or accredited seminars and webinars now, obviously in today's annual basis. And we typically lecture at most of the major dental conventions. So being the Greater New York, Pacific Dental, the Yankee Dental, obviously the CDA, the California Dental. We truly work with dentists nationwide. Market update. This has been the hot topic, particularly over the last year, how COVID-19 has impacted rents. And it's impacted very differently depending on where you are. And I'm not just talking about cities. So I know right now we're looking at Honolulu, but different pockets of Honolulu, depending on the property and depending on the area and location, can have a very different impact on it. But for the purposes of today, most of this information is going to be at a high level. It may not be directly related to your specific situation. That we'll have to go into a little bit more specifically, because one intersection can be very different rental rates and comparables compared to the one next door. But to give you some averages in terms of the area, so in Honolulu, the average rental rates has obviously seen a dip since COVID-19, as you'll see by the graph here. And they're averaging about $54 a square foot in the current trends. So you notice a large increase in vacancies as well from different types of businesses, particularly those that are not healthcare, that really rely on people to come into the store, like bubble teas and things of that nature, where unfortunately they've been severely impacted with that, which also provides opportunities and leverage on the dental component and dental side, because you are now the gold standard of tenants, because you've been able to show that you've been able to pay rent, we'll say for the most part, through COVID-19 or different components of it. While everything was shut down, you were still operating. In Maui, again, very similar in terms of the drop in rental rates and averages. So the average right now is just shy of $46 a square foot. So call it $45.80 a square foot. If you're looking in Beverly Hills, California, now this, not to give anyone in California a bit of a heart attack, this is based, as these are pulled through it, on a per year basis. Most of California, if not all, go by on a per month basis. So if you do some of the conversions here in terms of the rental rates and comparables, so you're looking at just about $93 a square foot in there, which it works out to be $7.70 a square foot in terms of on a per month basis. We're looking at San Francisco. Again, transitioning to the per month basis, you're looking at $6 a square foot. Through San Jose, or if you're looking at some more of the Bay Area, it's a lot closer to the $4.50 a square foot. And you'll notice a trend with all of the graphs where vacancies have increased and rental rates have decreased. This is because there's been a massive shift through different real estate portfolios, not only the smaller landlords, but particularly the large institutional or the REITs that really take a look at the financials from portfolio and real estate location per location, where there's an alternative, there's a change of businesses, there's large vacancies in different buildings. So this has provided an opportunity for dentists as well. I know there's a few doctors here, based on the feedback I was given prior to the webinar, that particularly here that they were looking in San Jose to open up a practice, primarily looking for a pre-built practice, which we'll touch on some of those components in a few minutes as well. Through Torrance, California. So you're looking at anywhere from $43 a square foot, which works out to be about $3.58 a square foot, through La Jolla. So for those of you unfamiliar, near just north of San Diego as well, is $4.59 a square foot. But what you'll start noticing in all of these graphs in the terms of the forecast and all the analytics is the vacancies are beginning to come down and the rental rates back up to begin correcting themselves as well. Now, this is not to say that every single location had a rent decrease. Again, it depends on portfolio, location to location, and how each of those locations were impacted. Those that were heavily impacted to vacancies, you may see a shift. Those that still had 100% occupancy, you're not going to have the same type of rent leverage because that area or that pocket hasn't seen the same damage. In Reno, Nevada, you're looking anywhere about $25 a square foot, or a little over $2 a square foot. So about $2.10 if you're doing per month basis as well. For those who have joined us in Northern Nevada. So the purpose of today's webinar, firstly, to teach you the importance of a dental lease. Some of the common financial terms that are found. So the key terms and provisions in the office lease and how they can impact you. The tenant lease cycle. So when do I start the process? When is the optimal time to begin either starting the renegotiation process, or when do I start evaluating what I want to do? Do I want to purchase property nearby? Do I want to evaluate a relocation, an expansion? Maybe you're happy where you are. When do I begin the process of a renewal? We're also going to go through some practical advice on negotiating or renegotiating your office lease. Some tips and tricks of the trade, so to speak. Now, this is a question I am asked very, very regularly. Do I buy a property or a condominium, or do I lease a space? Which is better? Which has a higher return on investment? Which is better in the short term, the long term? Please, Ryan, help me. I'm a big believer in looking at all doors and opportunities and slowly evaluating which one is the right option for you, because not all options are the same for everybody. There's different pros and cons. So as we're discussing them, we'll focus on the buying side first. So if you're looking to buy a property, whether it's single tenant, multi-tenant, or if it's a condominium type of property. So A, it requires a large upfront financial investment because you're not only building out a practice, you're also purchasing the property as well. So you may not have as much capital if you're looking to open up multiple locations or acquiring other practices or starting up. You may not have the capital to be able to do so because it's tied up in this one investment. You become a landlord. Most think that's a great thing, which it can be 100%. Again, it all depends on the individual. Many thrive, many, it's not their cup of tea because you're not only a practice owner, but you're also the owner of a property now. So if, for example, something happens with the plumbing, you have to call the plumber or fix the problem, not somebody else. You can earn rental income. So if you have a multi-tenant property, you can derive additional rental income from those other businesses. Greater flexibility on how to use the space. The great opportunity with this is you don't need permission to be able to add different walls, change a layout, go into the structure, and make alterations. Freedom to control the property. So if you want to change where the parking lot is or make an addition onto, whether it's a house type of property or a strip plaza and you want to make addition to it, it's your property. So you have the freedom to do so. Now on the leasing side, if you're renting your space, requires a smaller upfront payment. So maybe whether it's the funds or financial capabilities can and cannot do, but many doctors, more particularly recently, are looking to create small group practices or version of DSOs. And so this helps frees up capital to be able to open up different locations or allow someone to spend a little bit more on the build out and maybe furnishings because they have that additional capital free. Greater working capital. So I just touched on that in terms of building out. So maybe getting the extra x-ray machine or different equipment or higher quality of plumbing because you have that addition. And the flexibility to relocate or expand. So if you're in a condominium or you're in a single tenant property and there's no space beside you, what do you do? Where do you go? Now, if you're in typically maybe a strip plaza, medical building, whatever the case, if the next door vacates, you have the ability to expand or relocate if the building's being run down, you don't like the landlord, the area, and have the ability to move and not stuck to that real estate investment. Regardless of what path you choose, either way, a dental lease is pivotal. To have, whether it's between your real estate investment or real estate asset and your practice asset, or to hold your relationship to the space that you're in. But we'll touch on that in a little bit. Now, what is a lease? This is one of my favorite questions to ask in our in-person lectures. And some of the questions or answers that I receive are, it's an agreement, it's a contract, it's expensive, it's for the landlord. And some of the other choice words I won't repeat today for it, but essentially what a lease is it represents a relationship between yourself and the landlord. Now, what most people think when they think of a lease is this. It's the amount you pay to the landlord each and every month. When I ask the question, who here has read their lease? In a room of typically on average, we're about 30 or 40 doctors in the room. And depending on where we are, and I ask that question every single lecture. Put up your hand. Who here has read their lease cover to cover? Typically on average, 0 to 2 raise their hand. They know what the term is and what the rent is, and that's it. What they don't realize is it is the most expensive check you will ever write when you sign your lease. Because what you don't think of is necessarily is I'm not only paying this per month, but per year. And over the course of your career, that adds up. If on average, for simple math, we'll go, because you typically in the middle, we'll call it, with $5,000 a month. Don't worry about the square footage. We're going to keep it high level for this example. If you're paying $5,000 a month, and you can relate based on what you're actually paying, over the course of a year, that's $60,000. Over the course of 10 years, that's $600,000. And if you're practicing for 30 years, that's $1.8 million. And that's assuming your rent doesn't increase a penny. Now, we all know how often our rent increases. Typically every year. So you're spending, when you build out or acquire practice, you're essentially committing to the landlord to be spending over $2 million. If you thought of that or knew that before signing your lease, would you have looked at it differently? You've just learned one of the major leverage components during the negotiation. Not to say overpaying in rent will help. Absolutely, it's a big overhead cost. We'll touch on how to utilize it to ensure that you're not losing out in other areas that are potentially much more expensive. So why is the office lease so important? Firstly, Your office and your location is the foundation of your practice. Many of you are probably familiar with the term location, location, location. So your lease ties you to that location and gives you the right to that space for X amount of time. That time runs out, you no longer have the rights to that space, and the practice is in jeopardy. The investment and cost to build. So on average, it can cost anywhere from $150 a square foot, north of $300 a square foot, just to build out a practice from scratch. So that's not including equipment. We're just talking construction. So plumbing, wall partitions, electrical, etc. Just the construction and leasehold improvements. Now, if you're downtown San Francisco, for example, there are different labor laws. That number significantly increases. So this will all depend on the type of property, where you are, how much work is to be done, the size, things of that nature. So there are a number of variables. To give you an idea though, typically $150 to $300 a square foot, to give you a rough idea in there. The point is, it's expensive. It's also very difficult and time consuming to move. Most doctors don't look to relocate in their practicing career, unless for specific plans, and ideally on their terms if they would like to. Landlords also knows. So timing is critical in terms of evaluating your lease on what you want to do, no matter what your future plans are. It takes on average 18 to 24 months to relocate a practice properly. Now, depending on where you are, if you're in certain parts of Southern California, push that to 2 to 2.5, even closer to 3 years. I know some doctors that have been looking for longer, just based on the market and the vacancies. Now, right now has obviously been fantastic in terms of a big shift for that, but depends on where you are for that. And that's considering from just concept or idea that you want to move or you need to move if you're forced, to finding a location, negotiating the lease, designs, architecture, permits, construction, to doors open. So just concept and idea to doors open, at least 18 to 24 months, if not much longer, depending on where you are. So timing is critical. It can also make or break the sale of your practice. Would you prefer that your lease works as an asset, or would you prefer that it works as a liability? It also gives you leverage in the negotiations. Knowing which strings to pull, which knobs to maneuver, that's how you're going to win in the negotiations. Now, we're going to touch on a few of those components in just a few minutes later on. Now, some common financial lease terms. The common one and the easiest one to point out is rent. It is the biggest focus of every practice, as it should be a big focus. It's typically the second or third highest expense for a practice. Firstly being salaries, employees. Second being supplies, merchandise. Thirdly is typically overhead. And depending on where you are in the country, you're typically looking in the ideal world to be in and around the 8% average in terms of occupancy expense compared to production. Again, slightly depending on where you are and the type of property, etc., but in and around that area. Now, rental rate, I'm not going to touch on too much because it's fairly straightforward in terms of negotiating. Now, what's the fair market value in the area? What is your leverage in terms of the situation? Should I be paying less rent? Am I under the market? Am I at market? Am I overpaying in rent? Hopefully not. But that is one of the main financial components. And escalations. So to give you an idea in terms of the rent escalations, the average across the country is about 3%, which is the case for, in most cases, for throughout California, Hawaii, and Northern Nevada as well, with certain pockets might be slightly higher, depending, again, very specific and dependent on your specific location. If it's one of the premium plazas, might be a bit different. But anything higher than 3 is a little bit high. Anything lower, is obviously fantastic. To give you a general rule of thumb. Fixturing period. So the fixturing period is the time where you gain possession of the space and you're able to build out and construct the practice, and you don't have to pay rent, typically just utilities. Now the fixturing period, I'll touch on a little bit in terms of how it works depending on the type of situation that's there, but it'll vary depending on how much work it can be done and how much you need in cushion time. Commonly also known as free rent or mixed up with free rent. So free rent is when you open your doors and you're ready to practice, you have additional months of not paying rent to help alleviate some of the initial startup burden or renovation burden when you're moving into a space. So those are commonly mixed up terms in terms of blending them, where they should be two separate components. Many landlords will try and tell you they're interchangeable and this is the amount you get, when really you should be entitled and be getting this amount for it. Now this can vary depending on the type of property that you're looking at or situation. So for example, if you're looking at negotiating against a larger institutional landlord, they typically have more money to throw around because they have the capital. If you're talking to whether it's a dentist that owns the plaza or maybe a small family-owned type of property, then they may have less capital to be able to give you in order to help, whether it's outfit the space or tenant improvement allowance, which we're going to touch on. So they may be more willing to give more free rent and fixturing period in exchange for not giving you physical cash to help build out the space. So it's going to be a give and take depending on the situation, but all of them will add up together in terms of what the end goal is of investment and savings. Tenant improvement allowance. So tenant improvement allowance is the money that the landlord is willing to give you, and it's towards construction, not towards equipment. So anything that you're really outfitting a space or leasehold improvements, that's what they're willing to help put money towards. Now, a typical question I'm asked is, how much is a good tenant improvement allowance? Is $10 a square foot great? Is $50, $75, $80, $100? All depends on the situation and the evaluation that the landlord is putting on. Fortunately, most believe it's free money. It's actually baked right back into the rental rates that you pay, typically with interest. Now, I'm not to say or discourage that it's not a good deal, but you want to know the evaluation the landlord's putting on it. Sometimes it's better to take more TI or tenant improvement allowance. Sometimes it's better to take less or none. So be very, very careful in terms of more isn't necessarily better. It may be better to join with one of the banks or lenders. We work very closely with Bank of America. It might be cheaper to lend money or loan money from them as opposed to paying out of pocket. Additional rent or triple net charges. So additional rent can vary depending on what type of lease you're on. Whether it's a gross lease, there's typically no additional rent. If you're on a modified gross, there might be some sort of combination of whether it's maybe some sort of taxes or base year of taxes, insurance, maintenance, things of that nature. Or if you're on a triple net lease, with likely probably about 90% of attendees on this webinar are, it's been the big shift in commercial real estate. It's all pass-through costs from the landlord to you as the tenant. And triple net charges are made up of three components. They're made up of taxes, insurance, and common area maintenance. The expenses to upkeep the property. So greens maintenance, parking, roofing, things of that nature. That's all passed through. You pay what's called your proportionate share based on the amount of space you take up on the property. Now, what many don't realize is, particular to the maintenance section or the CAM charges, many don't realize, but they're actually being overcharged in that area. Not all by any means, but there are landlords out there, unfortunately, that are overcharging their tenants. There was a doctor who we incorporated essentially language in layman's terms in reference to detailed and itemized statements that they're to receive instead of a general reconciliation statement where it just states maintenance for the year is $40,000 is your amount. It's broke down. What were some of the details of that? When was the expense occurred? To who and why? To really see and have full transparency. What are they spending their money on? Or your money on, rather? And particularly having the right to audit those expenses. So having your CPA or accountant or whomever audit those to ensure that there's no funny business, essentially. I see a question here. I'll touch on it in just a minute, or address it rather. And one component many actually forget about is that even after you've negotiated the rental rates, you've negotiated the fixturing period, the time to construct. And again, that can vary if it's already a pre-built dental space, which I know a doctor was looking to potentially move into one in San Jose. Those will need maybe less of a fixturing period depending on how much renovation that's needed or updating it needs. Free rent, if you negotiate the tenant improvement allowance, the caps on additional rent, there's still the ability to have the landlord cover more expenses. Whether it's components of, you typically want it non-dental specific, whether it's something like the electrical or wall partitions, things of that nature, HVAC systems. So if you're moving into a brand new space, what age is the HVAC? Is it old, past its life? Is it brand new? Because I can tell you, and for those of you on the webinar this evening, if you've had to replace one, they're typically anywhere between $10,000 to $15,000. So if you can avoid that type of expense, wouldn't you like to? So these are some of the common financial lease terms in there. There can be other variations. These are the main terms and conditions for it. So I'm just going to read one of the questions here from the doctor. And please, I encourage, instead of the chat, please use the question and answering section. Just helps with different pop-up screens for myself. Just reading it here. What are some of the, or what are undervalued key negotiating points for lease or leases that typically are missed by dentists or dental tenants? Is there a best practices value for tenant improvement allowance that we can at least use as a baseline? So I guess a couple of different components there. One of the undervalued key negotiating components are, as I just mentioned, landlord work being one of the main components. Many forget, or the landlord will say no initially, and many dentists or typical kind of attorneys that don't really focus in dental office lease negotiations, they say, yeah, no problem. The doctor said, or the landlord said no, and we'll move on. Where we know they do agree on what they agree to. We know it's all part of the negotiation. That's the part they obviously don't necessarily want to pay for it, but in order to get your business, this is an exchange. Again, it's a give and take. And I'm truly a believer in it's got to be a fair agreement. It won't be ever extremely tenant friendly because the landlord would never agree to that. But what we don't want is it to be completely landlord friendly. It needs to be fair. So one of the undervalued key components is the landlord work. The other is typically a mix between the fixturing period and the free rent period. So depending on how much work needs to be done in the space, if it's a build out from scratch, or if it's pre-built but needs some updating, some renovations, just put the age or maybe the quality or the condition of it. Typically, there is money left on the table with a smaller fixturing period, a smaller free rent period. Those are two of the main components there. And it's expensive to build out a practice and move in and start up. And typically, if you're starting up a practice, you don't have a patient flow. So there's no cash flow coming in from day one. So the longer periods you can get for those, the better. Helps alleviate some of the initial financial burden. In terms of best practices for tenant improvement allowance. So tough to say in terms of some of the specifics, but I'd say it's good to evaluate. If you take less, how does that impact the rental rates? Or if you take more, vice versa. Because Some landlords may not be able to. Again, if they're smaller landlords, they may not have the capital, or the larger ones, they already have that built in. So some will say, if it's a larger institutional type of landlord, they may say, well, this is the tenant improvement allowance, whether you take it or leave it, this is still your rental rates, if they have the leverage to be able to do so. So it'll vary from property to property and situation to situation. So I just have a quick question here. Does your firm help renegotiate the rent? Our rent is 4% each year. The landlord has the right to a 4% increase each year. Will the pandemic have new rent increase freeze regulation? So, I mean, the short answer is yes, we can help renegotiate rents. In terms of the rent increase every year, 4%, again, it's tough to say at a high level because it depends on your specific area and your property, if that's fair or not, or high. In terms of if they're entitled to it, depends on what the lease states. In reference to the pandemic component of a new rent increase freeze regulation, I mean, unless there's a specific government regulation, which typically there's not specifically on those components, or at least for very long. If there's short-term patches, the governments won't get involved from that standpoint. I know in different parts of California, they weren't allowed to evict tenants during a certain point of COVID, but that's only going to last A, so long, and B, the landlord's going to look to make some other sort of a deal with it. Now, that being said, in terms of the pandemic and how it's increased rents, there might be an opportunity, depending on how your lease is structured, the expiry, your area, again, to revisit those percentages particularly as well, let alone anything else or the overall amount of rent. So what else is in your lease? So these are some of the critical business impacting clauses that are in your lease. So not limited to, but many of the common ones here. So we're going to go through a couple. So I'm just keeping an eye on time as well. But this is the assignment clause. So the assignment clause essentially outlines the transferability of your lease in the event that you look to sell the practice. So this language specifically in 75% of dental leases that we negotiate, which most of which have been quote unquote negotiated by a dental specific real estate attorney. So typically I would let everyone read it through our seminar, but given it's a one-way conversion here in terms of conversation, I'm going to go through it. So you'll notice in the first line, it states that you need the landlord's consent in order to sell the practice and transfer the lease. Very common in commercial real estate. Now, if you're up in Northern Nevada, for example, or some of the outskirts, whether it's towns, cities, things of that nature, where it's less of a kind of the San Francisco, LA type of landlords, there is an opportunity to have what's called a permitted assignment. So as long as you hit X, Y, and Z criteria, you don't need their consent. You just need to let them know and notify them. But in most cases, you will need the landlord's consent, which is not unusual. They want to know who's moving in. But what this states here is they just need landlord's consent. So what's the criteria of where they can say yes or no? So as this is based, because it's a rainy day, they can state no. Now it goes on to say they have three options for it. They can either A, approve the assignment of lease, B, decline the assignment of lease, or 3, choose to terminate your lease instead. Just for asking for consent, the landlord has the ability to terminate their lease. What's your practice worth if there isn't a lease in place? It goes on to say that additionally, the landlord has the ability to increase rents at least 15% or to the current rental market. So if it's more than that, they have the ability to increase it to that. Now, how would that increase impact the sale of the practice? Could the buyer walk away? Could they devalue the practice now? How could this impact the practice? It goes on to say and references that the tenant, if they should receive any sort of rental income, cash, goods, or any form of consideration in connection with the assignment, it's owed to the landlord. You sell your practice, say for $1 million, you owe a percentage of that to the landlord. How does that make you feel? Earlier today, I was speaking with a tenant in Burlingame, California, just outside of San Francisco. It's specifically referenced in her lease 50% of the sale proceeds. $1.4 million practice. So that would be $700,000 if they invoked it. It goes on to say, notwithstanding the landlord's consent. So say, for example, they do consent to the transfer of the lease. The tenant shall remain liable for the lease obligations should the buyer default. And many on this webinar today have likely either personally signed their lease or have signed a personal guarantee, which essentially means if there's ever a dispute between yourself and the landlord, they can come after you personally. And what you'll notice in this section, as you may recognize in your lease as well, there's no expiry. There's a doctor in Michigan in the end of 2017 who had sold his practice, moved down to South Florida to retire, had received a call 8 years later. Buyer had defaulted. Critical that these types of provisions are amended. So this is just one provision in your lease and a number of different items to address. And again, are all of these invoked 100% of the time? Absolutely not. But unfortunately for dentistry, if they are, it becomes a very expensive problem. We can pick up our desks and plants and move overnight. Unfortunately for you, you have the leasehold improvements that tie you to a space. The option to renew. So this essentially states the option, but not the obligation to extend your lease further. So I'll touch on that question in just a minute for the doctor that just sent that in. Now this is found in 90% of the leases that we review. So we're going to touch on this kind of more at a high level, but you'll notice in the first line that it states, provided that Dr. Joe Black shall remain as the tenant. So what this means is that this option to renew is personal to Dr. Black and does not transfer to a buyer. Banks typically now need, in most cases, 10 years of term left on the lease in order to help finance an acquisition. And that's whether it's in the form of just term and or options to renew, as long as the options to renew are transferable to a buyer. So you don't have to commit to 10 years today in order to sell the practice today. Now, landlords became very crafty as well. So you may see language such as the original tenant remain personal. Now it goes on to say a number of different other components and references default components of the lease. So if you've ever been held in default, your options to renew become null and void. And I'm not just talking about not paying rent. There are many other forms of default. So I encourage you to get very familiar with that section of your lease. Any renewal shall be on the current standard form lease. So if they want to make changes, you've already agreed to them and you don't even know what the changes are. And you have to. Based on market rent of renewing tenants in the building. What happens if your rent was significantly lower than your neighbors? Are you now expected to pay their rents because they were either A, poor negotiators, or B, maybe they accepted a large amount of tenant improvement allowance and accepted the increase of rents because they needed it, couldn't get it from a bank? Now, are you expected to pay the same rental rates even though you don't receive any money? This is a common component that doctors don't realize or see the quantifiable component of it, because they fight for these rental rate decreases of X amount, but leave these types of provisions in here that allow the landlord to significantly increase their rents at the end of the term. There was a doctor I was speaking with 2 months ago where unfortunately missed her option to renew deadline as well. The landlord wanted 40% more in rental rates. 40%. Because they referenced this. Regardless, they didn't need to, but they referenced this anyways. These are just 2 provisions that are in your lease agreement. And again, these aren't limited to, there are many other types of provisions. These are some of the more common ones. We haven't talked about a demolition clause where the landlord has a termination right in your lease. They look to redevelop the property. Or death and disability provision. God forbid something were to happen to you, the lease doesn't disappear. You and your estate still have to continue to pay. Now, I did forget to address the question as well. So the question from the doctor is, what is the ideal time to start the renegotiate or the negotiation for a new lease? My lease ends in November 2023, but we have an optional 5-year term to negotiate. Do we have time, or do we need to start now with the landlord? I actually apologize. I was thinking more towards the option to renew language in it. I'm actually going to touch on timing in just a minute. So I'm going to park that just for now. But good question, because we're on to that now. So the tenant lease cycle. So when is the good time to start, or the best time to either start the actual negotiations or start evaluating your lease or situation? We recommend at least 24 months out from expiring. Again, depending on where you are. If it takes, and there's low vacancy, it takes more so 2.5 to 3 years out from expiry because of lack of vacancy options in the area, even further in advance of lease expiries. So this is the time where landlords find the balance of they're allowing early renewals, and B, it's leverage for you as a dental tenant. Because it takes that long to relocate a practice, I can assure you landlords know that as well, and they know it's expensive. So you prefer typically not to do it. Timing is critical because it gives the perception, at least, that if they don't give you a good deal, you can leave. Now, majority of our renewing tenants and clients, probably 95% of the time, end up staying. Again, it's a headache and expensive to relocate, but again, it gives the perception that you could if you needed to. So to answer your questions in terms of it, in terms of November 2023, depending on where the location is and the typical demand in the area or the demand for that property, it may very well be a good time. We're about that 2.5 years out for it. So again, depending on the area, might be an opportune time to begin the negotiation process. I'm going to touch on in terms of how to in just a second, but the third reason in terms of the tenant lease cycles, you'll notice the 12 months remaining, 8 months, and then the expiry date. So there are 2 key and critical dates in your lease. First being the obvious one, being your expiry date. The second one is your option to renew deadline. There's typically some sort of notice period that you need to give to the landlord in order to express your option to renew. Typically, whether it's 3 months, 6 months, 9, 12, or some sort of combination where you have to give it between 9 and 12 months, for example. So less concerned in terms of how long, but you need to know that date. Absolutely important, because if you miss that date, again, they become null and void, and the complete negotiation level disappears or changes. The landscape changes. So very, very important. If you missed it, it becomes a very different negotiation. There's a doctor who sent me a picture. He missed his option to renew deadline by 1 day. 1 day. Sent me a picture standing beside this giant 4-leaf sign, 6 feet high, in front of his practice. Landlord now wanted 30% more in rent because they knew they had the leverage. So critical to know your dates in your lease, because the closer you are to not only your lease expiry, but your option to renew deadline, the less leverage you have. So I hope that helps answer in terms of the timing question of the November 2023 expiry. A question here is, how willing are landlords in modifying the lease agreements before signing? So it depends on your timing and area. I can tell you the value for you as a tenant is A, you invest a lot of money into the space. B, you're long-standing tenants. And C, you pay your rent on time. Typically, the default rate for a dentist last year was under 2%. Under 2%. I can show you other types of businesses are not the same, especially through COVID. Very different for restaurants and things of that nature, nail salons. So are they happy about amending their lease agreement? I mean, obviously not. It's very common because it's a landlord standard friendly lease typically, but they absolutely will modify it. And that's where it's finding the happy medium. Again, we're not looking for the fully tenant friendly lease because the landlord's not going to agree to that. But we just don't want it to be all in the landlord side. We want something to be fair. The landlord ignores my renewal request. Do I have the right to ask for a response? So depending on your situation, if you're referring to an extension option, or I would like to renew my lease, say, for example, you don't have an option to renew and you'd like to renew, then that depends. They have all the right in the world in that case not to respond. And that should certainly worry you in terms of timing and what they're looking for. Because if they're using it as a delay tactic, so another doctor that's on the webinar today as well, they wanted to talk about early renewal with the landlord. I think they're about, I want to say it was 9 or 10 months out. And the landlord said, no, thanks. Well, let's just wait till 2 months out from expiry. The problem is they know and they want that because the closer they are to expiry, the more leverage they have. You can't pick up and move overnight. So to answer your question, in terms of, do you have the right to ask? Depends on what you're asking. If it's just a general renewal request, they really don't have to, no. Which can also be concerning because maybe they have other plans for the property or the space. So you want to find out very quickly what is occurring and what you need to do to get ahead of it, so that way there's no downtime for the practice. There's a doctor speaking 3.5 months ago who was month to month, I think for 14, 15, it was a long time, 14, 15 years, call it, and was great relationship with his landlord. Handshakes, they were buddies, and the landlord sold the property. When the new landlord came in, instantly sent out termination rights, the 30 days, because everyone was month to month, the 30-day termination right to all of the tenants, because they had completely different plans for the property and renovations. He's been out of practice for 2 months now and still looking. So I guess it's about 3.5 months now, but still looking for a space. That's detrimental to the practice. So save for time here, just going to continue through and we'll cover some extra questions at the end. Now, in terms of some strategies and tactics for the negotiation, this is the cheat sheet for it. Gather all the documentation first. So your original lease, your extensions, amendments, estoppel certificates, any relevant documents referencing your lease. Put them together and you want the executed copies, both signed from yourself and with the landlord. Then you're going to think of and evaluate your practice goals and career goals. So this is the wheel that we use, and this is why we've been so successful in the 26 years. So we want to identify, what are you looking to do? Stay, go, bring on associates, business partners, transition, whatever the case. We'll then review your lease in detail. So highlighting all the risks, exposures, liabilities. We then prepare market research. So that's referencing the rental rates and comparables in the area, as well as our proprietary data. So doctors we've worked with in the area. Then we're going to develop a strategy for it. So don't just sprint into the negotiations. I want $1 or 50 cents a square foot off of rent and a decrease in the increases, or I want to remove my personal guarantee. Have a properly developed strategy with high, medium, and low priority items, full well knowing you're going to have to concede on some of the low priority in order to get some of the high priority. Think of it like a game of poker as well. First, there's typically a negotiation on economics, the financial. The landlords want to know, how much are they going to get paid? of rent. And frankly, most clients want to know that too, because if it's going to be way too high or out of the ballpark, particularly if you're starting a practice, there's no sense in spending time on a legal because it does not going to make sense economically. Once that's agreed upon, typically on average takes a little over 15 hours. Again, we're representing over 500 doctors each year. Then we begin the negotiation on the legal terms and provisions. So those are typically a little over 35 hours in terms of average, because again, we've only gone through 2 negotiations or 2 provisions rather, and you can see all the different points within each provision that there are. And before signing, and I can't stress this enough, re-review the lease as if it's your first time ever signing or looking at that document. You'd be surprised how many times landlords forget to reinsert something, or it goes back to their landlord language. So re-review the lease again in detail prior to execution. Now, just a couple case studies quickly to give you an idea. And again, everything varies from situation to situation, timing, and so forth. But just to give you a quick idea, so Dr. Scott, we represented through San Francisco. So he was a renewal tenant. And these are some of the different components that we talked about. Some are going to be quantifiable, some non-quantifiable. So all the financial terms, fairly simple to quantify. You saved X amount in these negotiations. Some of the non-quantifiable components are things like a relocation clause, whereby the landlord has the ability to relocate you to another space on the property. Typically, it's structured where you have to pay for it. Could he invoke that clause or never invoke it? Maybe he never does. So it doesn't cost you a penny. But if they do, and that's the case, you're looking at another, again, 200 plus to pay on the size of your practice, $1,000 of additional costs that could have been avoided. Dr. Adam in San Ramon. So very similar. So he looked to open a practice. So you'll see much higher quantifiable savings in certain areas. So $35,000 in terms of 9 months of free rent, we were able to negotiate. In addition to different operating expenses, things of that nature. So again, there's various different ways of saving money, whether it's from a rent standpoint or a financial standpoint, or avoiding any sort of a legal risk or increase of rents or being terminated, things of that nature. Some of our recent Google reviews, Dr. Christian Solomon with that. So I won't take too much time on here. You can always find them. They're on Google, obviously, as well. We're still pushing for a 5-star rating. We're a 4.9, but certainly something that we're very proud of and continue to want to expand the name brand that we have and the service that we provide our clients as well. But Dr. Amura Naz, I guess to touch on more particularly the assignment clause for those that say, well, this is never going to happen to me or will never happen. Does it always happen? Absolutely not. But for Dr. Naz, at 74 years of age, her landlord had denied her a practice sale 3 times. So these types of experiences become very, very real. Now, thankfully, we were able to get 100% cover of the build-out cost, which I don't want to get the expectation here that happens in or is common and happens in many cases. It's not, but certainly a focus in terms of saving. Now, one of our services is what's called the critical dates and risk analysis, essentially a lease review. To give you an idea, I know I've had a few questions with this. Essentially, it's a $2,000 value or $1,995. And we spend 3 to 4 hours analyzing your lease for traps. If you have one, if you don't, we evaluate from a new start standpoint or an acquisition standpoint, what you're looking to do, some of the different areas to give you an idea of what rental rates are, demographics, things of that nature. We then schedule a call with you. Essentially go through your plan. What are you looking to do? What's your vision, your plan? We'll go through the lease and the items and how they can impact you. And then essentially a treatment plan at the end. So there is no obligation for this. And whether you're starting up a practice, acquiring, whether it's in the next, currently in the next 4 months, 6 months, a year, if you're just curious in terms of what the process, how it looks like, happy to walk you through in regards to this lease consultation as well, even if you don't have a lease. If you are an owner or occupant, we'll be discussing if you have a lease, evaluating, giving you feedback on that current lease that's in place. If you don't have a lease, we'll be able to walk you through why you need one in place for tax and liability purposes, and then what the proper lease structure for you would look like based on what your real estate plans are moving forward. I would like to thank our sponsors at Henry Schein for covering the cost for everybody, all the attendees today, to receive this lease consultation complimentary. So certainly appreciate them. We worked very closely with Henry Schein for, I think it's actually a decade now, this year, or maybe the 11th year, but worked very closely with them to help protect their clients from their real estate needs. Make sure they're not taking advantage of overpaying in rent, avoiding some of the legal components of it, so that way their offices stay open, frankly. The more they're open, the more supplies are used and so forth, which is obviously better for everybody. But for those of you that I know it's in the afternoon, you might be getting back to patients if you're out in Hawaii as well, or might be finishing the day if you're in California, Nevada. I will be hanging around for questions. I know there's a couple sitting there right now, but I thank anyone that needs to go right now. Thank you for joining. I appreciate it. Hope you found it insightful. If you would like your lease consultation, let us know. A poll will be up here. Actually, you might see it right now to get a little feedback in terms of it. Either myself or one of my associates will be scheduling with you. We'll go through everything in detail. What I'll need on my end, if you do have a lease, I'll need the original lease, the extensions, amendments, estoppel certificates, assignment agreement if you purchase the practice. We'll review those all in detail. We'll have our leasing team complete their analysis on the rental rates, comparables, determine if you're overpaying in rent. And then as well, let us know a few dates and times that you're available. That way we're able to schedule accordingly, particularly the urgent situations first. So if you are month to month, meaning your lease has expired, but you're continuing to practice, please let us know if that is an urgent situation because you're leaving the practice exposed for. I will be addressing questions now, but certainly appreciate everyone's time and energy this evening on the course. Hope it wasn't too boring. I know it's not sometimes the most exciting topic, but certainly appreciate it. So I'll go into some questions now here. So one of the questions here, is it better to have more options, one or two, or is it normal if the landlord asks for fair market value, but not less than last month's rent plus 3% annual increase for options to renew? So I'm going to guess some of that language was straight out of your lease, which is wonderful. But I always recommend as many options as possible. The longer term and stability you can have for the practice, the better, because the options to renew, they're not committed term. But if you're happy and you want to stay, you have predictable term. If you don't have any options to renew, the landlord's just not under the obligation to extend your lease. So similar to a comment earlier for the doctor that asked if the landlord has to reply, if you don't have an option to renew, they don't have to do anything. How long do commercial tenants have before eviction during COVID, and what can I do? So this will be very, very dependent on your specific area and county. So that we'll have to connect separately on, because that'll be very specific. For the webinar here today, we'll go at a little bit of a higher level. Because again, obviously I don't know where specifically you are, but it comes down to even the town, the county, and things of that nature as well. So happy to connect separately and individually as well, whether it's through the lease consultation or just separately if you have a specific question like that as well. My contact information is at the bottom. What is the typical or total cost of using your firm's services to negotiate the lease with the landlord? So it really depends on the scope of work. Again, this evening, one of our services is the lease consultation. Now, obviously, again, Henry Schein has very kindly covered the cost for everyone to receive it. So, and again, there's no obligation for it after, but it really depends on the scope. So part of that lease consultation, when we review and complete our due diligence and discuss with you the scope of work and what you're looking to do, I'll be able to help outline kind of what our services would be, how we'd be able to help, and what they look like as well. Delta Premier, is it true if I move, I lose Premier status? So that's more focused toward less of a real estate or lease component, more of an insurance-based question. So I apologize. Unfortunately, it's not my specialty and expertise in terms of what loses you premier status for that. Highly recommend speaking either with your insurance provider for that, or if you have anyone, I know there's firms there that can assist in negotiating different insurance rates. Highly recommend asking one of them as well. I apologize, just not my specialty. So I'm month to month and have a great relationship with my landlord. Why should I sign a longer term lease? So for the example I provided earlier, just a recent one, and I kind of joked around with the doctor. He has a good sense of humor as well, but I called him our poster boy, because this is a doctor who's been practicing for, he's 67, so call it 30 plus years. And unfortunately, landlords, it's a business relationship as well. And they may not realize when they sell buildings that new incoming property, that lease is the only thing that ties you to the space. And they now inherit the control of it. So it leaves you very exposed. Maybe something won't happen, maybe it'll never happen, but if something does, how is that going to impact your practice, your production, and the eventual saleability of the practice, which becomes very expensive if you leave it exposed. But great question. So in terms of the time, I know we're a little after here, went a little bit longer. There is one, I'll answer this one more question. Then if you do have any others as well, please let me know. Happy to answer, whether it's through the lease consultation or just separately. My contact information is there. Happy to provide any specific guidance necessary as well. Is it common to be able to negotiate with landlords to remove personal guarantee if the lease is assigned to a buyer? So interesting question, actually. So a few different components regarding the personal guarantee. Very common when you're starting up or acquiring a practice to have to provide one. As you've shown covenant as a tenant, over whether it's 5 years, 10 years, you pay rent on time, you're a good tenant. That's the first time you should begin either limiting the personal guarantee or removing it completely. Because when you begin a practice, typically you have high debts from dental school, you're acquiring or building out a practice. You're typically at that age, you're buying a house, a car, maybe a wedding. And so that you're really, I hate to say it, you're not worth anything. Now, as you begin practicing, your debts are high, assets are low, it begins to shift. As that occurs, that's when you want to separate your business assets from your personal assets. So if you're not doing it, which you should be during the term while you're practicing throughout your career, at the very end, say, for example, for whatever reason, it's still there and relevant on your lease, absolutely, we should look at removing that, or at the very least, limiting that through the assignment process. Now, ideally, it's done beforehand, so when you're at kind of the 11th hour and assigning the lease, the landlord cares a lot less. I've had, unfortunately, to see doctors pay their way out of a personal guarantee. One recently was $40,000. They can really say no or ask for anything with it. Depends on how the lease is structured. But in reference to your specific situation, it'll be tough to say from here. But if you're taking advantage of the lease consultation, I'll be able to give a much more specific answer or specific guidance of some of the variables that can occur and what can and can't happen, or can and likely won't happen. I think. Great question. If you do have any other questions, regardless of the lease consultation, if you want to take advantage of that, feel free. If you just have a separate question that you want answered as well, my number is there at the bottom, my email as well. Feel free to reach out to the info as well if you've received that, to receive the link to the webinar this evening. Happy to address any additional questions or concerns you may have more specifically there. Well, it's been a pleasure. Hope everyone stays healthy, be well, and enjoy the rest of your day. Take care now.